All right, well, let's kick off with a look at how the major indices are doing so far today. All three in the red after starting in positive territory. We're seeing the Dow down just 0.03%, the S&P down 0.73%, and the Nasdaq, the tech-heavy Nasdaq, being weighed down the most, losing 1.84% so far. For more on this, let's take it over to Jared Blikre at The Interactive. Jared?
That's right. We're seeing NASDAQ here slipping into the session lows. In fact, they've been there for about an hour or two. The Dow well off of its highs. It was sitting on some nice greens earlier today, and you can see it is now mired in the red. S&P 500, similar story, but I want to take a broader look at the S&P 500. This is a 6-month chart, and I'm going to put the 50-day and the 200-day moving average on here because they are crossing. And when they do this to the downside, that is exactly what is called a death cross. The opposite called a golden cross. Now, while this is bearish in the longer term, sometimes it is a short-term buying signal for some traders who like to punt this. Nevertheless, that is for not the faint of heart. Also checking a look at the VIX, which remains stubbornly elevated above 30. It's been there for quite some time. And even the ICE BOV move index, that tracks bond market volatility, that has been on the decline. This is printed after the daily close, so we don't have today's data just yet. But the yield curve is expanding. It is expanding just a little bit. The 5-year, the 30-year, and the 10-year all at multi-year highs. And we want to dig into the market here. Based on the sector action, financials in the lead. You can see energy taking on the chin here, 3% to the downside. That says crude oil had its lowest close in about 2 weeks, just hovering above $100 a barrel. And we want to get to some of these Chinese stocks because they are in an absolute bloodbath. This is not the year-to-date chart, or this is not the year-to-date time frame. This is actually what happened today. Pinduoduo down another 18%. That's after Didi was down 44% or so Friday, down another 4% today, and that is because of these lockdowns. The lockdowns having a profound effect on the markets, but not the bank stocks. If you take a look at the banking sector, because of that yield curve action that we're seeing, JP Morgan up 1%, Bank of America up 2%. By the way, Berkshire Hathaway, record high today. Haven't seen that in a while, but Berkshire really bucking the trend of the mega caps. Let me just show you that 1 second here because the mega caps have been under pressure today, guys.